Okay, good morning, subscribers. Happy Monday. It's what is it? March the 10th. Hope everyone's doing well. I'm going to put up a little bit more detailed analysis on what happened on Friday and in general last week. But I think for the most part, last Friday was basically a non-event. I don't think the market's going to fall apart here. I do think we're going to test 1900 before we see 1850 again. But then again, I took off some risk on Friday, and we'll talk about that here in just 1 second. But essentially, it's just that non-farm payrolls came in much better than expected, 175 versus I think 150,000, and so through that lens, it was just a little bit of sort of taking profit on good news, sort of buy the rumor, sell the news, classic thing, and I think that's all good. Today we have the Ukraine, I think, Prime Minister going to Washington. That's going to be something where headlines could fly. So all else being equal today, I don't think I'm going to do a whole lot of trading. It just doesn't feel like it's something I want to push. Although there's a whole lot of stocks that I'm watching very closely, some of which I've already posted throughout the weekend. I know a lot of you guys have already sent me comments on some of those stocks over the weekend. So just please keep that coming. I'll be happy to get the discussion going a little bit more on the MarketFi Study Trader blog. But that's the S&P, IWM, Russell 2000. There too, not surprisingly, nothing bearish. We closed sort of right near the flat line on the day. Left a bit of a longish tail, but also to a pretty decent body. So again, pretty much a non-event. QQQs, Nasdaq 100, more or less the same thing. Sector rotation continues to happen, though. I talked about the XLF financials, particularly the brokers, which is more the XBD, which is I'm not quite sure if that's something that everyone can pull up on their platforms. But XBD is just the broker-dealer index, the Amex broker-dealer index, and you can see that's really the stocks that ramped. So the Goldman Sachs, Schwab, TD Ameritrade, AMTD, those kind of stocks did really well last week, and they continued to do well pretty much throughout the rest of the week. On the other hand, we have healthcare stocks, the XLV, which is the ETF here, showing some relative underperformance. Nothing dramatic, but that makes sense that they would kind of come a little bit under pressure. Same thing with the biotechnology ETF, something I've been leading for some time, basically cracking late last week or throughout at least the second half of last week, which is also one of the reasons why I started getting out of this Gild, G-I-L-D. Gilead Science, I saw no reason to keep it anymore. I think we had a pretty good entry on the stock. Hope everyone did got out when we got out, but sort of through the medium-term lenses, holding its support level, so it's not really falling apart. I just think the slope got a little bit too steep on the broader biotech technology stocks. So let's go through some of the things I did last Friday. I took profits in a few more things. Portfolio again year to date is up 7%. So I think all in all, we're all things considered, we're doing very well. Certainly on an absolute performance basis, but also on a relative performance basis. So first of all, I went in a shorted line, which is Lin Energy. The stock, I put up the analysis throughout the weekend, so you should have seen it. But basically, in the medium term, we snapped below this trend line here after earnings in late February, and on Friday we saw follow through selling back below the 100-day moving average, which basically now targets the 200-day moving average. I think a little bit below that would be a pretty good target level. Then I took profits in PBI, which is Pitney Bowes. Again, this was not going to be a big mover. We did make 3.5%, which on a stock like this, beautiful breakout. I talked about this now for some time, and it's that's all good. It's something I don't necessarily need to keep that as a runner, but it's okay. Then Yahoo, we got out at I think 0.5% profit. Stock just isn't really doing much. I'm happy to entertain it again for breaks past $40 in the long side. And then we sold IRBT, closed this position for a loss of 44 basis points, or 0.44%. Just I still think the stock's very constructively positioned, but it's not going to do anything if the broader market can't do anything. Basically, we just saw follow through selling after an exhaustion candle here on Thursday. So that's what's going on in the bigger picture. Again, for the stocks that I'm looking at today, please have a look at the blog under blog post called Charts for Monday, High Probability Stocks to Watch. But I'll quickly flip through a couple of them. I still like For actually, one of them that's not on there is Williams Sonoma. Williams Sonoma really, you can see, I just played with this chart, and I'll see if I can post this analysis a little bit later. But you can see stock basically, if you can get past 60 bucks on after earnings on Wednesday, I think the stock certainly has room into the mid to high 60s. It's just one of those stocks that hasn't really paid to short it on any really at all over the past years. As frustrating as that is, because that actually the company has a lot of headwind that it should face. Otherwise, CPB, which is Campbell Soup, I think this stock just looks great. It's still basically consolidating its post earnings rally. I pointed to this I think a couple weeks ago after this up gap. It's now consolidating at this lateral resistance area. It's back above the 200-day. To me, this look is itching to get into the mid to high 40s here pretty soon. Again, it's not a massive mover, but it's something nonetheless. eBay really is the stock probably that I like the most here. The continued situation over there with ICANN and the board of directors, Mark Anderson, other people over there. Basically, the stock's at an absolute all-time high, or it's tickling its all-time highs from 2004, and it's been basing here for almost 12 months. It just looks absolutely ripe to break past resistance. Maybe it'll take a little bit more trying, but this is a stock that I really would like to. I'm actually even considering buying some leaps, so long-term options, and then just trading around with the stock. But you can see the stock basically broke past resistance here. A few weeks ago after the ICANN news, and now it's just giving us this higher base to trade with. So if this thing can get past the $60-ish level, I'm certainly going to go long, and we'll see what we can do. Hope this makes sense. As always, any questions, please let me know, and take care.